Well, hi, Harry here from Istanbul, Turkey. Sorry for not making the rant on Friday. I had travel complications, so I'm doing it today on Monday. Istanbul, first of all, is a wonderful city. It's like number 20th, 21st in the world, 15 million population. And anybody here that I've met will tell you it's more like 20 million if you really count the whole area. I mean, a huge city. Old and very hip at the same time, you know, water everywhere, bridges. It's really, I recommend this, and I would say more restaurants per square foot, at least close to Paris, if not more. So we're really enjoying it here. And then next I go to Australia for a tour, a speaking tour there, the first in 3 years. So our Australia subscribers, you know, go to gocogroup.com. It's GoCo putting this on. It's going to be November 8th through the 14th in Melbourne, Sydney, and Brisbane. So look for that, and I'll see our Australian subscribers in Australia. And of course, this brings us to the stock markets in a very, very critical area at this point, because as you know, I'm saying this is the crash of our lifetime, and it has begun January 4th on the S&P 500. So that first crash happened in the mid-June, and that was enough to qualify as a first crash off a bubble, up 34% on the NASDAQ. We had the two-wave bounce into mid-August, perfect retracement. And then we've seen another wave down since, which looks like it's just bottoming here and looking to maybe bounce a bit here. Now, this wave we've just seen should be the first wave of the broader third wave down. And the third wave usually is the longest and the hardest. So if this really is this crash of a lifetime and we're really into it, we should see follow through here pretty soon. Okay, so I'm gonna be watching this like a hawk. So I would expect we hit about 11,000, I think 88 on the NASDAQ here recently. We should bounce to maybe 11,640, maybe higher, and then we should turn back down and make even newer lows and go down sharper and sharper. So I'm gonna keep you updated on that. And then last, of course, the Treasury Bonds, where I'm getting the most questions, TLT and ZROZ, Z-R-O-Z, to play the ultimate safe haven in a deflationary crash like this. And again, it's not gold. Gold may rally in the early stages here a bit more, but it eventually is likely to go down as well. Now, TLT is really being a bad boy here, I just have to say, because I've studied this in the past, and particularly the 2008 crash. Last time, TLT bottomed and started heading up 6 months before the top in stocks in October 2007, and then continued to go up in the crash. This time, it's still going down. It's been 93 recently, 10 months after the stock market peaked. Now, the reason for this is obvious, but still doesn't make sense to me totally. The inflation is so strong from the huge overreaction to COVID, but more so the Fed does not seem to be tightening fast enough according to the markets, even though it's the hardest and fastest the Fed has tightened maybe forever. So that's what's happening now. But I really do think we have to hang in here on TLT because it is the ultimate safe haven, and you'll never, I'm telling you, we will never see a Treasury bond rally like this past or future. Your kids won't see it. I'm saying that TLT, the target is as high as 196, and it's like 93 to 97 recently. That's more than a double in a year and a half in Treasury bonds. So this is the play of a lifetime, and it's a safe haven on top of that. It's not like shorting stocks, which is much more volatile and risky. So again, we have to hang in here on this one. I think I'll let you know if it really looks tough, but I think this should be turning around soon, and I will keep you updated.